the subscribe button.
Welcome back to the channel. Today we'll talk about cryptocurrency and specifically the crypto crash that's happened in this year. I typically do not talk about cryptocurrency, but you cannot ignore the growth of crypto over the last few years, and it's also difficult to ignore the volatility of the crypto market lately. Volatility is so much so that the dramatic downturn in crypto valuations are raising concerns of a total crypto crash. So what is crypto? So if you've been living under a rock for the last decade, I'll tell you in a simplified way what crypto is. Cryptocurrencies are digital currencies that are not reliant on any central authority. So crypto essentially is a digital currency that is not backed by a government or a bank. And while crypto is designed to be outside of the traditional financial system, it can be affected by that traditional system. And we'll talk about that in a minute. What is the crypto crash that we're talking about? Over the last few months, the crypto crash has wiped out an estimated $1.6 trillion US. Coinbase has tanked in value. Bitcoin and Ether has also lost value. For the most part, much of the gain over the last number of years have disappeared. And let me put this in perspective. Bitcoin have dipped below 28,000 after hitting a high of over 68,000. But one of the largest crash is that of Terra USD. So what is Terra USD? Before we get into what happened to Terra USD, it's important to note that 2022 has not been very kind to the stock market. The stock market has fallen. For some individual stock, valuation has dropped greater than 70% in 2022. And on the crypto side, Terra, one of the largest stablecoins, have just been completely wiped out. So let's get into Terra. It was supposed to be pegged to the US dollar. And Terra was not backed by cash treasuries or other traditional assets. It was definitely backed by well-funded venture capital firms. The supposed stability of Terra was derived from algorithms that linked its value to cryptocurrency Luna. So the aim was to use algorithm to peg Terra to the US dollar. Essentially, minting $1 of Terra required burning $1 worth of Luna and vice versa. So as Terra demand increased and its value goes above $1 US, to bring that value down, Luna would be exchanged for Terra to increase Terra's supply to bring the value down. So it's a supply and demand situation. And the reverse would be true to increase Terra's value where low demand lowered its value. But there is this weakness in the system, the possibility of a death spiral. So what you end up having, and that's what happened in 2022, with the large dumping of Luna on the market, Luna began to lose value as supply became inflated. This resulted in more Luna being minted for each Terra burned. This, in effect, caused a death spiral effect on Terra. As Luna's value fell, investors panicked and they sold more of their tokens. This then further lowered the value of Luna and further fueled the death spiral until Luna went all the way down to zero from a high of around $116. And when it's all said and done, it is estimated that this crash wiped out about $40 billion US. So let's look at the real world effect on crypto, right? Again, crypto is supposed to be outside of the traditional system. So just as the stock market is affected by the traditional financial system, so is the crypto market or the crypto ecosystem. The current crypto crash is part of a broader pullback from risky assets. This pullback has been driven by rising interest rates and regulatory policies to tighten monetary supply, inflation, and also economic uncertainty in view of the Russian invasion of Ukraine. With interest rates rising, saving accounts are becoming more attractive to many, and many investors are simply taking profits and pulling money from the stock market and putting it where they can get more predictable returns. Additionally, as the stock market falls, some investors are liquidating their crypto investments to meet other obligations. This all comes together to drive crypto prices lower, which causes further panic in the crypto ecosystem. Another factor here is also the fact that many governments are beginning to look closer at crypto, and there's a larger and more aggressive and louder call to increase regulations around crypto. So let's look at the long view. As the crypto crash continues in 2022, it is expected that a lot of different cryptocurrencies will fail. They will fail, but others will succeed. This is not the first time that crypto has fallen. Back in May to June of 2021, there's also a massive slide where Bitcoin lost about 45% of its value. So for those who are in crypto for the long haul, they're expecting massive price swings. For those who are just into the speculation, trying to make a quick buck, some will time the market correctly, while others will be stuck with massive losses. So as crypto continues to grow, it just cannot be ignored. And whether or not you put crypto in your portfolio, it is a decision that you should not take lightly. What this crash of 2022 has really shown is that you should not invest in things that you do not understand. And further, invest only what you can afford to lose. If you like this video, subscribe to the channel.